Welcome to our video on how politics affect the Indian stock market. The Indian stock market has always been subject to various factors, including economic, social, and political. However, among these factors, politics plays a crucial role in determining the direction and momentum of the stock market. Political decisions and policies on issues such as taxation, banking, infrastructure, healthcare, and international trade can have a significant impact on the stock market. In this video, we'll take a closer look at how political developments in India can impact the stock market and how investors can navigate these changes to make. India is a country with a rich political history and a diverse range of political parties, each with their own ideologies and policies. As a result, political decisions and events can have a significant impact on the stock market. Let's start with the basics. The stock market is a reflection of the overall health of the economy. When the economy is doing well, the stock market tends to go up, and when it's not, the stock market tends to go down. The political environment plays a crucial role in determining the health of the economy, and in turn, the stock market. The first way in which politics affects the stock market is through policy decisions. The government's policies, such as taxation, subsidies, and regulation, can have a significant impact on the stock market. For example, the government's decision to reduce corporate tax rates in 2019 led to a surge in the stock market, as investors became more optimistic about the prospects of Indian businesses. Similarly, the government's decision to ban high-value currency notes in 2016 had a significant impact on the stock market. The move was aimed at reducing corruption and black money, but it led to a temporary cash crunch, which affected many businesses. As a result, the stock market saw a sharp decline. Political instability is another factor that can impact the stock market. When there is uncertainty in the political environment, investors tend to become more cautious and risk-averse, which can lead to a decline in the stock market. For example, the stock market saw a significant decline in 2019 when the general election was approaching, as investors were uncertain about the outcome and the policies that would be implemented by the new government. Another example of political instability impacting the stock market is the ongoing farmers' protest in India. The protests have led to a blockade of major highways and rail routes, disrupting supply chains and impacting the economy. As a result, the stock market has been volatile, with investors uncertain about the future of the economy. Political events can also impact the stock market. For example, the Indian government's decision to withdraw the special status of Jammu and Kashmir in 2019 led to a decline in the stock market, as investors were uncertain about the impact of the decision on the economy. Similarly, the outbreak of the COVID-19 pandemic in 2020 led to a significant decline in the stock market, as investors were uncertain about the impact of the pandemic on the economy. However, the government's response to the pandemic, including stimulus packages and regulatory measures, helped to stabilize the stock market. The political environment can also impact specific sectors of the stock market. For example, the renewable energy sector saw a surge in stock prices when the government announced a target of 450 gigawatts of renewable energy by 2030. Similarly, the pharmaceutical sector saw a surge in stock prices when the government announced a plan to increase healthcare spending. On the other hand, the real estate sector saw a decline in stock prices when the government implemented the Real Estate Regulation Act (RERA), which aimed to regulate the real estate sector and protect home buyers. The act led to a decline in sales and profits for many real estate companies, which impacted their stock prices. Political decisions and events can also impact foreign investment in the stock market. For example, the Indian government's decision to increase the limit on foreign portfolio investment (FPI) in corporate bonds in 2019 led to a surge in foreign investment, which boosted the stock market. Similarly, the government's decision to ban Chinese apps in 2020 led to a decline in foreign investment, as investors became uncertain about the impact of the decision on the economy. The political environment can also impact the global perception of the Indian economy, which can in turn impact the stock market. For example, the Indian government's decision to launch the Make in India initiative in 2014 was aimed at boosting domestic manufacturing and attracting foreign investment. The initiative helped to improve the global perception of the Indian economy, which led to a surge in foreign investment and boosted the stock market. On the other hand, political decisions that are perceived as anti-business can negatively impact the global perception of the Indian economy. For example, the government's decision to impose retrospective taxation on Vodafone in 2012 was perceived as anti-business and led to a decline in foreign investment and a negative impact on the stock market. Political decisions can also impact the banking sector, which has a significant impact on the overall health of the economy and the stock market. For example, the Indian government's decision to merge several public sector banks in 2019 was aimed at improving the efficiency and profitability of the banking sector. The move was well received by investors, which led to a surge in stock prices of these banks. Similarly, the government's decision to announce a relief package for the banking sector during the COVID-19 pandemic helped to stabilize the stock market. The relief package included measures such as a moratorium on loan repayments and an increase in the credit limit for small businesses. Political decisions can also impact the currency market, which can in turn impact the stock market. For example, the Indian government's decision to demonetize high-value currency notes in 2016 led to a decline in the value of the rupee, which impacted foreign investment in the stock market. Similarly, the government's decision to reduce corporate tax rates in 2019 led to an increase in the value of the rupee, which boosted foreign investment in the stock market. Political decisions can also impact the commodity market, which can in turn impact the stock market. For example, the Indian government's decision to increase the minimum support price (MSP) for crops in 2018 led to an increase in the prices of agricultural commodities, which impacted the stock prices of companies that rely on these commodities, such as FMCG companies. Similarly, the government's decision to increase the import duty on gold in 2019 led to a decline in the demand for gold, which impacted the stock prices of companies in the jewelry sector. Political decisions can also impact the oil market, which has a significant impact on the Indian economy and the stock market. For example, the Indian government's decision to reduce the excise duty on petrol and diesel in 2021 helped to reduce the prices of these fuels, which impacted the stock prices of oil marketing companies. Similarly, the government's decision to increase the tax on imported crude oil in 2019 led to an increase in the prices of crude oil, which impacted the stock prices of companies in the oil and gas sector. Political decisions can also impact the infrastructure sector, which is a key driver of economic growth and development. For example, the Indian government's decision to launch the National Infrastructure Pipeline (NIP) in 2019 was aimed at boosting infrastructure development and attracting investment. The move was well received by investors, which led to a surge in stock prices of companies in the infrastructure sector. Similarly, the government's decision to announce a relief package for the construction sector during the COVID-19 pandemic helped to stabilize the stock market. The relief package included measures such as an extension of project timelines and a reduction in the performance security deposit. Political decisions can also impact the technology sector, which has emerged as a key driver of economic growth in India. For example, the Indian government's decision to launch the Digital India initiative in 2015 was aimed at promoting digital infrastructure and creating digital empowerment. The initiative helped to attract foreign investment and boosted the stock prices of companies in the technology sector. Similarly, the government's decision to ban several Chinese apps in 2020, including popular apps like TikTok, impacted the stock prices of Chinese tech companies listed on the Indian stock exchanges. However, the ban also created opportunities for Indian tech companies to fill the gap and capitalize on the growing demand for alternatives to Chinese apps. Political decisions can also impact the healthcare sector, which has become increasingly important in the wake of the COVID-19 pandemic. For example, the Indian government's decision to launch the Ayushman Bharat initiative in 2018 was aimed at providing universal health coverage and creating a healthy India. The initiative helped to boost the stock prices of companies in the healthcare sector. Similarly, the government's decision to launch the COVID-19 vaccination drive in 2021 helped to stabilize the stock market and boost the stock prices of companies involved in the production and distribution of vaccines. In conclusion, politics can have a significant impact on the Indian stock market. Political decisions on issues such as taxation, banking, infrastructure, technology, healthcare, and international trade can all impact the stock market. It is important for investors to keep track of political developments and their impact on the stock market to make informed investment decisions. Additionally, political stability and a pro-business environment can help to boost investor confidence and drive economic growth and development, which ultimately benefits the stock market and the Indian economy as a whole. Thank you for watching this video on how politics affect the Indian stock market. I hope you found this information informative and useful. If you did, please hit the like button and share this video with your friends and family. Also, don't forget to subscribe to our channel for more such interesting videos. We'll keep you updated on the latest happenings in the world of finance and investing. Thanks again for watching, and we'll see you in the next video.